Good morning, traders. It is, or I should say, hello, traders, since it's not morning everywhere. It is 8:02 a.m. Chicago time, 9:02 Eastern, on Thursday, the 16th of August, 2018. Thanks for joining me yet again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, the overall market stance is bullish, risk on. We have a gap up in the ES. We're gapping up into Tuesday's range, and the leader this morning is the Dow up 205 points, 204 points, 0.81%, followed by the Euro stocks, and the Nasdaq's up almost 39 points. Was quite a bit higher earlier, and so it does look like risk on. The laggard today is gold. Gold's trading at $1,182.70, down $2.30. The U.S. dollar index is down. The bonds are down. The Eurobond's down. The 10-year's down, and the yen is down. So pretty much everything that is considered a safety asset is down. So again, coming into today, risk on is the sentiment of the market. So allocations to stocks so far. Yesterday, of course, was really interesting. We don't get those days very often where the market basically telegraphs its intent and follows through. Some really good rotations and good price structure yesterday. As far as what could interrupt our auction this morning, we had a bunch of releases in the U.S. Of course, we had a busy overnight as well. Where's my calendar? There we go. We had this morning. We had housing starts in the U.S. We had Philly Fed, which came in weaker. It's the lowest since November 2016. Housing starts came in weaker as well. Initial claims came in better, 212 versus 215,000. And as far as what could interrupt our auction, still not seeing anything on the calendar. Calendar's relatively clear. Remember that today WTI SEP futures expire. Oh, is this correct? That doesn't seem right. No, that doesn't seem right. Um, yeah, this calendar is incorrect here. So, bottom line, not much to interrupt the auction in terms of planned releases. Now, caution today, as Larry Kudlow, the U.S. president's economic advisor, is making the rounds on TV today and is speaking up tremendous progress in the discussions with Europe and Mexico with regards to trade. That he's saying that Trump's is going to take a firm stance on China and the tariffs. And he's willing to continue the fight. President Trump is also tweeting this morning that the economy is doing better than ever and money's pouring into the cherished dollar. I'm suspecting that today is a day where we're going to see some continued heavy news flow. So keep an eye on that. Let's take a look at what we expected yesterday versus what we got. Yeah, it's options expiration. That's right, for WTI SEP. Um, wow, that is not the screen that I want. Let me fix this real quick. 1 second here. Sorry, I'm traveling again, and so things have to be rejiggered. 1 second. Boom, boom, screen, up, and rock and roll. Boom. There it is. All right, so yesterday, if you recall, the main idea was for the market to be responsive early on, um, meaning buying up, and then I was looking for it to trend down. I was making the argument based on the way things have been set up that we are likely to test lower into 2812, eventually 2804 and 2800, given the way we are handling this 3 day balance that we came into yesterday. And then the alternative is if we drop quickly out of the 2820 area, that we're likely to bounce back up into 2835 and potentially go to 2840. Scenario one played out, but it was definitely very aggressive. Here's what actually happened. You'll notice my two-tick Renko does not fit the screen. Normally, the width of the bars is 5 on this thing, like this, and we could usually see the entire day on a two-tick Renko, and what that indicates, look at how much, it's a sea of bars. What that indicates is a lot of rotations yesterday, a lot of rotations. I like a lot of rotations, a lot of opportunity with rotations. So yesterday we open up right up here at 28.25, and then we attempt to push into the prior day's range. We hit the low of the prior day to the tick. Let me turn down my news feed. Hit the low of the prior day to the tick, and then sellers step in. The moment of truth right here. Do we break through and extend the opening swing lower, or do we turn back up and extend the opening swing higher, and push back into the range? What we did is we pushed lower, and frankly, I could not participate in this at all. There was nothing for me to lean against on the short side. Um, and so the primary opportunity. So given this, what's the plan for the day? The plan is to sell wherever any pullback we're looking to sell. So the first opportunity comes in, stalking 28.12 on a pullback into the stock zone. So anytime there's a stock zone, I'm going to look to get short, not buying stock zones. The mid is another opportunity to get short, except this mid here did not really work out. It didn't provide the order flow um, stance that I was looking for to get short. Um, and then this provided an opportunity right there to get short, and I was looking for to pull back, lower high, get down into. So it was the 2808.50 was an obvious test here. I pointed that out in Convergent Trading's chat that we're likely to fall back through to retest 2808 before the next move, and it ended up holding at 2805, which was the prior high here, and then it rotated back up to 2816 and a quarter. Couldn't do anything there. Pullback to the stock zone, very weak pullback to the stock zone at 2813, and it creates an opportunity to at least retest the IB low 2806. And it just could not, right? So with it not being able to and pushing back through 2813, two scales and a stop, and then the market just was unable to explore lower prices very efficiently. There you can see it's struggling to stay down. How do I know it's struggling? I'm watching these rotations: 4.25 down, 4.5 up without a 7 tick counter rotation. Then we have 4.75 down, and then we immediately have 5.5 up. That gives me an indication of what the path of least resistance is, and that's really how nature works, right? We follow the path of least resistance, and that gives us an early clue as to which side is facilitating price discovery more easily. And here we are back in the opening swing, which actually was kind of interesting. I knew that I expected that we're likely to just flutter here in the mid and VWAP and maybe on top of VPOC and close somewhere in here. But for it to recover the opening swing, that's a pretty good show of strength coming into the end of the session. So we close up high 28.22, and then in the overnight session, where's my overnight chart? Voila, c'est là. Um, the overnight session, we drift down from the reopen and then immediately shoot up on the Asian session open, shoot up, and then we are not able to get below mid, retest the mid to the tick, not able to get below mid throughout the entire session and holding in what looks like a P-shaped overnight session. Do you recall what it means, what could be indicated by a P-shape um, profile? A P-shaped profile indicates potential long liquidation. Again, a P-shape cannot be something that forms all morning and then we run in the evening and then you end up with a P shape, right? This also provides a P shape. Um, and it closes, so there has no chance to trade down here. That's not a P shape. That's not long liquidation. And so what we have in a P shape is we open in the lower end, and then we very quickly move up, and then we balance in the upper end, and that's long liquidation, and it's likely to continue to squeeze. There's strength up here. The point of control hasn't shifted up closer to the high. The high has an okay taper on it. Um, has an okay taper on it. It's not a weak high or anything. And what we have also is pretty high volume in the overnight session. We have about 100,000 contracts extra in the Globex session, in the extended hour session, than we would consider to be the mode for the overnight session for this product. Okay, so I mean short covering. I'm sorry. Thank you for fixing that, Brian. This is short covering. Long liquidation is a B shape. B shape is long liquidation. The longs get squeezed and then we balance. So this is a short covering indication. Um, and we are likely to go where 2840 is the balance area in this region, right? So if we go back to our trusty composite here, we see that the MC point of control is balanced at 2840. So combining these 3 days right here, the balance area is 2840. We're trading at 2837, 38. Um, and it looks like we're likely to be attracted to that area again. Now, I'm going to tell you that I don't want to repeat myself again, but this profile just looks awful in terms of what microcomposites look like historically. This microcomposite looks just terrible in terms of how complete it is. So imagine what would happen if we have this taper here and then we extend the top. So now the microcomposite looks more normal and we start to see the volume taper off as it goes higher and higher and higher, which is what we would consider to be the natural progression of price discovery, and that puts us in the gap zone, which is where we're likely going to end up today. So let's extend this profile forward, even though yesterday didn't really come into balance. But let's see what it did yesterday. And here's what it did yesterday. Very, very blunt underneath. The market just basically traded through all of these prices. I got to say, this is really just ugly right here. What kind of price discovery is this? I mean, what this is showing is essentially everything below 2836 was evenly traded. You can see the volume at price, at every price, is just fairly blunt, right? It's fairly boxy, fairly linear, and we don't have any consensus. This is a market that's basically saying, Sure, I'll trade here. Sure, I'll trade there. Sure, you want to go lower? I'll trade there too. I'll trade there. I'll trade there. I'll trade there. I'll trade there. Rather than, nah, this is too cheap. Nah, this is too expensive. Oh, yeah, here I think prices are fair. I'm going to interact here and add to the point of control or the point of control zone. Uh, it seems to be discovering prices very thoroughly throughout the range. And that makes it really hard to arrive at some clear conclusions based on things, traditional things like profile shapes and things like that. So today, although we're very close to the 2840, which is the tractor beam, which is the big Death Star tractor beam pulling the ship closer to it. That's basically what this is. This is a magnet. Um, Does it mean that it's a high probability push through the gap zone here? Let's pull the gap zone back up. There's the gap zone from the 10th. Does it mean it's likely to push through and finally get us our 47.75 that we've been harping on since Monday? Who knows? But know that we are back into the multi-day balance. Back into the multi-day balance. We're back into the 3-day range from Friday, Monday, and Tuesday. And what that means is it's likely to be quite choppy. Um, so that's how things are shaping up, that it's likely to just chop around and chop around and chop around. Looking at the overnight action since last night, it's the market seems to be taking a liking to whatever took place in the euro session. Um, but I'm seeing a lot of heavy prints. So you see these big dots, heavy prints all over the place. So it's again, even through the overnight session, we got some pretty high volume in the overnight session. We're seeing pretty heavy trading throughout this range. The map is getting brighter and brighter in terms of orange to red as we approach the open. But as more and more algos kick in and more people position themselves into the market, but overall, it's exploring the range pretty heavily. So it's rotating down pretty deep, it's rotating up pretty deep, it's rotating down pretty deep, and that's the kind of day I expect us to go into today. So what am I looking for this morning? Let's kill these boxes because we don't need them. What am I looking for this morning? Pretty choppy trade. Yesterday was well telegraphed in terms of intentions. This morning, I'm looking for an open auction out of range. I'm looking for a small push towards 28.30. I'm looking for an impulse that takes out the overnight high with a high probability and a test to 28.40, push to 28.40, and then consolidation in this area with a potential upward skew that takes out the 28.43.75. Remember, 28.43.75 has been tested and retested. It's a weak high. It's a very, very poor high, and it's likely to be taken, but expect it to be done in a very choppy way. That's scenario one. So eventually, I'm looking for it to ride up there and push through and kind of reach up on top of the shelf here that was created by this microcomposite. See this shelf right here. I expect it to reach up in here and discover what is up there. So that's the primary scenario. The secondary scenario explores the opposite, and that is an open auction in range that pushes immediately towards the overnight high, breaking the overnight stat, tests higher, and then start to explore lower into yesterday's range, potentially pushing into 25, 26, and then finishing somewhere in the middle, chopping out for the rest of the afternoon. Now we have a gap zone beneath us as we open up, and we very often leave these gap zones open, but scenario two seeks to retest and kind of complete the auction from the top. Less likely than scenario one, in my opinion, but that's what it looks like. Now, what does that mean to you as an individual trader? What that means to you and me is that we are we're gapping up into 3 days of balance, and that basically means that we need to keep our patience intact. We have to be very, very patient today with how things set up. After a day like yesterday, we get a ton of rotations, tons of opportunity to make money and to lose money equally, and an easier market to telegraph what its intentions are. So we have another situation like we talked about yesterday where, Monday we had a B-shaped profile that's long liquidation. Tuesday we had a P-shaped profile, which was a short covering, and then you combine those and you get a double distribution profile. And then like yesterday, somewhat of a B-shaped profile as we liquidate longs on the drop in the morning. And then the overnight session gives us a P-shaped profile, and then we're gapping up into that P portion of the P-shaped profile. And it's just nasty in this area in terms of indecision, indecisiveness. It's like someone sitting at a restaurant with a menu that has 400 delicious looking items on it. You want to taste every single dish. This is what the market is doing. It's taking a very strong liking to every single price along the way. And what that means, what that likely means, is chop, chop, chop. So your short-term traders are the ones that are likely to get chopped up, and that would be you and me. And so it's really important to just chill and let the market set up and tell us where the biggest rotation is so we can follow that along. Okay? Does that make sense? Hopefully that makes sense to you. Stay out of trouble today. Good luck, and I'll catch you tomorrow. Convergent Traders, we have our study hall today on risk management. The invitation will be sent here shortly. Take care.